traders, welcome to the TMT Stock Market Strategy video for Monday, January 30th. All right, so we had a dead Thursday, pretty much a very quiet Friday, really nothing going on. Market's still holding in at all-time highs. And I'm going to go through some charts like we always do. I'm going to give you a little bit of factual events that happened. We all know about Donald Trump over the weekend banning refugees and immigrants coming into this country. Flip-flopping, turning, saying, okay, green cards and visas are okay. So that's not really good, right? This markets are down right now in the pre-market based on that because there's a lot of uncertainty. What else is he going to do? This was a quick announcement, and it happened without even telling everybody or the American people that it didn't happen. So nonetheless, the markets does not like that, and that's why the markets are down about 9 handles right now in the ESE Mini Globex session. What are we looking for? What are we to expect? Well, we're trend traders here at TMT, but I will tell you, and I've been saying, use caution. I think we're in a topping process, and I don't know when, but I could say that, and that's not going to be any value to anyone, but I will tell you, and I'm going to go over some evidence that we're in a topping phase and that we're just about ready for a market to roll over, or, as you know, volatility to really start to pick up. Now, I looked at some data over the weekend, which I always do doing the analysis work, and Trim Tabs had some great information. In January, we had mutual fund outflows of 16 plus billion in January alone. Mutual fund outflows, and we had ETF inflows of over 18 billion. So what is that telling you? The retail crowd is heavily long. On top of the VIX, and I want to show you this. This is a 20-year chart of the VIX, guys. We closed at 1058 on Friday. That is almost at historical lows, 1058. Not quite, but at 1058 right here, okay? Look what happened, 939 in 2007. 1058 was Friday's close. That's a very, very long time since the markets have, at least the VIX, have seen that low. Now, if I go back, okay, and let me just get back my my cursor, and just to show you guys, if I just pull this back from 1998, we haven't had a reading that extreme. Okay, complacency readings. Okay, consumer confidence 6-year highs. Okay, markets extremely overbought, 24 times forward PE on the S&P. And if you follow the markets like I do, obviously, you know that the shenanigans on earnings is all smoke and mirrors. The analysts bring down estimates to make sure that they beat. So it's all smoke and mirrors. They're not making money like they should. Not every company. But you have got to be really careful, guys. This is something that to me, we're heavily one-sided. Also, very key chart of importance here is the NYUD. I have many, but for the sake of time on this video, lower lows and lower highs. Okay, breadth of the market is not participating here. We have intermarket divergence. The markets are making new highs. Breadth is not. That is not a good sign, guys, for this bull market to continue. At one point, it's going to falter. Now, does it mean that it can't go to 2,300 in the ES and the S&P cash? Of course not. It could go to 2,400. But we're within probably, I would say, anywhere from 100 to 200 S&P points away. Now, that might seem a lot, but it really isn't. If you get 3 or 4 go-go days, you're talking 20, 30 S&P points a day. You could do it blindfolded, right? Especially with the algos that participate. So we could either move up, and I do believe that we are in a fifth wave right now, fifth wave rally, and I'm going to show that to you on the S&P. But be very careful out there. Don't get too complacent. At any given moment, we could start getting a pullback, which will turn into a full-fledged correction. And I do believe that at the moment, based on a technical view, that we're getting close to a market top. Okay, it's only a matter of time is when the market participants or the bigger money, the smart money, realizes, hey, this Trump rally was a little too premature. Okay, especially now with Donald Trump tweeting everything out every minute of the day. Not one president has done that. And on top of that, making these executive orders coming out of the blue without even informing the American citizen. That's uncertainty for the markets. The markets do not like uncertainty, okay? Whether it's good for the economy or not, we're talking markets here, all right? So just be very, very careful. A couple things I want to point out. Oil. Oil commitment to trade reports has the smart money, the producers, the hedgers, the most shorted crude at these levels in all of 2016. So over a year, the market, the producers have been short. That's pretty convincing to me to say that crude oil may be a buck or two plus, but I think crude starts to roll over a little bit after when we get some inventory numbers, maybe Wednesday. It's not a timing tool, but if you are long crude, it would definitely mean tighten up your stops. Okay, here's USO. You could see that we've been battling this 12 area here in USO. And I took USO as a proxy for oil. As you know, it's an oil ETF. A lot of traders trade it, and they keep asking me USO. So I figured let me just show you USO. You could see that 12, 12 and a half is a very, very big number, and needs to clear that to continue this move higher. Okay, so keep an eye on crude. Look for what I'm looking for is a catalyst to move this market lower, meaning crude oil, and not just price, because as you know, there's a lot of geopolitical news that comes out of USO, meaning crude, that can really push this market plus or minus. GDX looking pretty constructive. I do like to see one more pullback. I don't know where it stops, but if it can stop somewhere around here, maybe 21-ish, that'll make a higher low from this previous low and should be off to the races once we take out this swing high here. Okay, that is how to play GDX to give you that ultimate confirmation that bearish symmetry is completed, right? Lower lows and lower highs, taking out the downtrend line. All right, so we can back test this downtrend line and go higher. That's how I'm going to look to play GDX in the coming days and weeks. And the same thing with GLD, okay? GDX should lead, so let's see if that happens next. Spiders, okay. So if you look at, and I've talked about this last time, you know, you could see here, this is your last leg, right? This is going to be your last leg here. This is your fifth wave, your fifth move up, all right? And where does it stop? Let me just clean this off here. We don't know, all right? The fifth wave can move up. There are extensions that I'm going to point out to you guys, but if we were to move higher, I think that'll be the last thrust higher. And if you looked at the 1987 crash, and you looked at 1929, and you looked at, we had a blip in, even in 2000, we had the big tech wreck in 2000. They finished off with, or right when the last exhausted rally, meaning that the shorts gave in, they're all done, they throw in the towel, they're long, retail is long, and there's nothing to push this market higher anymore. Because the shorts fuel fire. Remember, the shorts have to cover. They have to purchase stock, pushing this market even higher. So just letting you guys know, I believe that we're on a fifth wave, and this will be the last move of this bull market run for quite some time, or I would think at least for several years. All right, and no one knows until we really get that pullback or correction. Okay, we could just get a correction and then start another leg up in the bull market, start a new bull market. I mean, that's possible. So no one knows this until it does happen. Transports, I had that little tiny head and shoulders that's alleviated, took out the head. But the transports does look good. I will not deny any industrials, okay? And the material stocks look good. So that, to me, also is going to be contradicting of what I'm saying at the moment, and I understand that, but you have to look and gauge one asset class at a time when you're looking at the overall trend. Right now, the trend is up, and we will continue to look to buy pullbacks or buy strong stocks that are pulling back. Okay, transports look good. There's nothing wrong with it, other than the fact that it's extremely overbought and extended. IWM. Now, this did not make new highs, okay? This did not make new highs as of yet. This is a bull flag here. We pointed that out last week, all right? We did have that breakout. We're testing it now, all right? You can even go here, or you want to go here at the bigger bull flag, which that makes more sense since we have a bigger flag. So we could see much higher prices here, all right? However, we don't know the uncertainty here of what Donald Trump is going to create for these markets. So just be cautious. A little word of advice. Playing it to the long side is fine, but knowing the fact that we have market divergence, we have poor breadth. Our indicators are showing us that breadth of the market stinks. It's not good at all. We have an overextended market, and we have extreme complacency on one side. That is a recipe for a real nasty pullback, okay? And again, we don't know when this is going to happen. That's why we want to keep our eyes open. I'm watching the VIX on a consistent basis, guys. If the VIX starts to move up, and I see bonds starting to creep up along with gold, that's going to be that fear trade starting to kick in again, and that should give us at least a pullback in equity markets, and we'll see where that happens and where it goes. Have a great day. We'll see you tomorrow. Take care.